It's nice to see you as always for our monthly update. How are you keeping?
Yeah, very well, thanks. It's sunny. It may be the 1st of November, but the weather is pleasant, at least with me. So hopefully everything else can remain pleasant for the rest of the month. But my goodness, there are some huge things coming up in November, not just companies reporting, not just the Bank of England meeting, but we've got the COP26 meeting as well. And that's a huge and important thing, and something which even a few years ago, we probably wouldn't have been talking about that much, but it's super relevant for today.
Absolutely. So in the last, month or so, we've had much calmer markets in October, which will be a welcome break from the volatility we had in September. We've also had the autumn budget. Just a quick recap on that, Chris. Anything that you were surprised about in that budget?
Well, the budget was interesting because it used to be, back when I first used to look at budgets 25 years ago, they never used to tell you what they were going to say. But this time it all appears in the newspapers a week before or on Sunday TV or something like that. There was no real huge surprises there. I think the good news was that at least over the last 9 months, the UK economy has got better, in the sense that we've recovered from the COVID crisis to a good extent, and that's allowed people to become employed again, prospects for the economy to improve, and consequently, when the government looks at things such as debt and uncertainty, it looks a bit better, and hence why they haven't at least increased taxation, which I thought was guaranteed really a few months ago even. But at least they've managed to sort of minimise that a little bit. I still think taxation is going up during the 2020s, sadly, but that's for a few issues, not just a lot of debt, but also, let's face it, an ageing population and different requirements within our broader population. So were there any big surprises in the budget? Not really. And you can see that, as you say, by the reaction of the pound, which has gone up a little bit over the last month, and also the UK stock market, which has done a good job, actually. And it's not just the fact that the UK is relevant for the global economy, but it's also the fact that the UK market has some good exposure to the banks industry and to the energy industry, and they've done well as well. They've benefited from some of the uncertainties out there, or some of the improvements that we've seen. So overall, do I still think that 2021 will be a good year for investors? Clearly, patently, yes. It's been a positive year, it's been a recovery year, it's been a good year to be involved in the markets. But do I still think we've still got some scope for the end of this year, up until Christmas, for markets to do a little bit better, to give us some further returns? I think that's still possible. The average company is still doing better. People are still becoming more likely to be employed. That's good. But also we're starting to get back to, again, feeling a bit more comfortable to go on holiday, to move around and things like that. It's not an easy world out there. It's not perfect, but it is better. And that's half the battle.
Absolutely. And you touched on there about COP26 meeting in Glasgow, which is happening as we speak. Can you see any sort of talks that will impact the markets, or any agreements that you can see immediately impacting the markets from those discussions? Or do you think it's very much going to be a situation where stuff's going to get passed around, but we don't see much out of it?
Sadly, I think that last scenario, Rob, is probably closer to the truth. This takes, clearly, when we talk about climate change, it's a very long-term matter. It's over the next year or two, but the next 10, 20, 30, 50 years that it's important. And unfortunately, our choices today and tomorrow have an immediate impact on everything. My feeling is that a little bit of progress will be good, in the sense that by progress, I mean a focus of all countries around the world to try to reduce climate change and issues and challenges. I think that's a good thing. However, medium term, to make it really impactful, you've got to see all countries of the world actually making progress. And it is tricky for certain countries. It's not just the emerging markets want to have the chance to grow their economies in a similar way that we did 20 or 30 years ago, but it's also that certain big countries, even like America or Australia, they're still controversial on these issues. So this is still a big debate. Is it a super important thing to be thinking about? Absolutely. But sadly, I think you're right. I don't think we're going to get any huge conclusions from it over the next week or two. We'll get a few headlines and a few what appears to be movements forward, but has it been a real radical change? Probably not, is the answer. That's to come, fortunately, for another year or two, I'd say.
Absolutely. Great stuff. Thanks, Chris. I suppose last thing just to wrap up on, we're a bit soon meeting, really, because the Bank of England's going to be having this committee as they do each month. Likelihood they're going to notch rates up. What are you thinking on a scale of 1 to 10?
Yeah, on a scale of 1 to 10, I would give it a 7. But my feeling is that, fortunately, if they do move interest rates slightly up for the first time in a few years, and clearly from super low interest rates to still super low interest rates, but a little bit higher than what they were, it doesn't have that much of an impact on your average day-to-day life. If you have a mortgage or got some borrowings or something, it doesn't have too much of an impact. Sadly, it doesn't mean you're going to get paid a huge amount of money having cash in the bank either, I'm afraid, but such is life. However, do I think the Bank of England are going to have to raise rates in November or December? I think they have to, because inflation is there. We can all see it in our day-to-day lives. It's something we're totally, completely used to. It's a little bit higher than what it has been, but anyone of a decent age has seen inflation before. It happens and you have to deal with it. The Bank of England can't have super low interest rates forever. That would be silly and imprudent. So it's right that they're looking to raise rates, but it won't be too much. And it's just that first step in that movement back to a more sensible policy. Here's what I worry about, if I have to share something with you over the next year or two. I worry that whilst we're getting recovery now, we will be getting recovery in, let's say, 12 or 15 months' time still. Because what you really want is an economy that is growing at a good manner with a sensible inflation rate, not too many problems, year in, year out, and not having boom or bust. We've had that difficult time at the start of 2020 with COVID. What we don't want in, let's say, the end of 2022 or into 2023, a return to recession or low growth or something like that. That's still the big discussion and the big debate, but I'm hoping the Bank of England sees the sensible thing to do and slightly raise interest rates in November and December. If you don't raise interest rates, then you worry that actually you've got no real solutions here, and you end up having this super problem of being too scared to raise rates and therefore having a higher rate of inflation at some point in the future.
Great stuff. Thanks, Chris. Thanks for the roundup as always. And look forward to seeing you in a few weeks, because we have our investment committee then at the start of December. Amazing how quickly they come round.
It is amazing, isn't it? It's going to be an exciting end of the year, lots to think about, and even more lots to think about for next year.